for Global Business Update. Michael Wilson joins us now from London. Good morning, Michael.
Good morning.
Home sweet home.
Great pleasure to come and see you last week, by the way. Okay, so China shares down a bit this morning. The common thought is that the US House Speaker Nancy Pelosi is indeed going to Taiwan, and we have covered in the past what China's attitude towards that is. This is certified by what's described as local sources. She is actually going ahead to Taiwan. Now, Taiwan, as you know, is a democratic self-rule island that China sees as a runaway province. So that's affecting the markets there. Reserve of Australia hiked rates by 0.5%. The Shanghai Composite down 2.6%. Heavyweight Alibaba and Meituan falling as far as the Hang Seng is concerned. Now, China's property could be dragged down. I think it almost certainly will be, but could be dragged down, it's saying, by the loss of confidence in the property sector. This is a contagion which people are very, very worried about right now. There is a feeling that, as we know, as we were talking about last week, that Evergrande problem may never go away. It's 30% of government revenue comes from land sales, and Evergrande did not deliver its $300 billion restructuring plan over the weekend. And in filings with the Hong Kong Stock Exchange as a result of not doing that, it repeated that what it's doing is it's got what it's described as preliminary principles in restructuring where it's going at the moment. Different news on China's electrical vehicle makers, NIO and Li Auto. Deliveries rising particularly strongly there as those two car manufacturers are coming out of what was a bit of a lockdown. They're continuing to deal, obviously, with supply chain problems and all the rest of it. NIO said it delivered 10,000 vehicles in July. That's up 26%. And Li Auto was up 21% year on year on their delivery figures. South Korea's inflation has got to a 24-year high. Don't think there's any particular reason to suspect that with the consumer price index now at 8.3%, accelerating from a 6% rise the month before. July inflation rate very, very fast indeed. So in all events, a likely increase in interest rates from their central bank. Now, one ship, we didn't really get to this last week because hasn't happened, but the London insurance market got together with various ships, and one ship is actually coming out of the Russian blockade in the Black Sea, so far unscathed. It may be that if this is a successful trip to Lebanon, then it will make shipping companies and, of course, insurers, more importantly, perhaps, believe that it'll add confidence to it. Just to give you an idea, usually it's about 194, say 200 ships a year on this route, and there's just one making its route at the moment at sea as we speak. Coal prices, dirty old coal, soaring amid global coal consumption. It's expected to reach record levels not seen since 10 years ago. For all the obvious energy problems, unfortunately, what's happening is that governments are scrambled the investment has not been made over the years. It's very, very tight supply indeed. So that price will probably go up and continue to rise, the markets think, well into 2023. As far as the United States is concerned, stock futures slipping after the first trading day in August. Pinterest up 21%, despite disappointing results. But this is after a large asset management company revealed it's the largest investor in the social media company. All the major averages finished their best month for a long time at the end of last month. How they'll fail in August, the Dow Jones slipping 46 points to end at 32,000. So it'd be interesting to, if you do measure the success of the US economy through what its stock market does, August is going to be a very, very interesting month. Don't forget also the factor that the big boys and girls tend to be away from their desks during August, but things can change. Now, Italy and a snap election call for September. There are a number of factors overlooking this. Obviously, Mario Draghi is one of them. And the other thing is punishment for the the parties that are seen to have been instrumental in causing the disintegration of the national unity government. And this will be a major factor through August and up to September the 5th. Draghi, of course, was head of the ECB and trying to engineer a sort of economic revival of Italy, which he was finding very, very difficult indeed. To the UK and BP results, huge profits, and huge is not normally an adjective that I am very happy with financial journalists using, but these are absolutely massive. Underlying profits hit $8.45 billion, £6.9 billion, more than triple it made during the same period last year, the second highest in the firm's history, so they're very big indeed. And it comes, and I'll come on to this slightly later, it comes though household energy prices are rising, particularly in the UK, and believe me, there will be more and more calls for another windfall tax on companies like BP. That's really down to the new Chancellor, whoever he or indeed she may be. The UK, British Airways, is actually halting Heathrow short-haul ticket sales for 7 days to limit the disruptions it puts it for actual customers themselves. Unfortunately for BA, precisely the kind of people from whom they make the most money, which are business travellers, tend to book at the last moment. Will then be no longer able to do that, and how this actually ties in with them trying to manufacture a different kind of, or a more energy conscious business model to a formula and a business model which has very high fixed costs in it. It will be very, very difficult indeed. That cost of living thing in the UK, it's forecast now with the price cap in October. In other words, this is the maximum price that energy companies can actually put on things, and also how it unravels in January. 3,600 a year, the average cost this winter, and that's a significant chunk. Energy bill given was £1,400 a year ago. Now more than double that, £3,600. Oil, well, as you know, OPEC Plus meets on Wednesday. Russia's oil production is falling, exports rather are falling very, very slightly. There are signs that China and India are buying slightly less. What that's down to, nobody knows. They've just seen the figures, quite honestly. But as I say, this crucial meeting will be happening on Wednesday, the OPEC Plus meeting. That, remember, is after the US president got a very frosty reception from Saudi Arabia when they were asked to increase production. And crude, as you know, has consistently traded above $100 a barrel since February, which has obviously driven up the cost of living in many, many countries. That's the global view this Tuesday morning.
Well, Mr. Wilson, you're more than forgiven for using a word like huge. I'm actually going to go with hugest. In 14 years, we're talking these profits from BP. And when you now contrast that with what people are going through, like you said, as of October last year, homes in Britain were paying £1,400, and now they're looking at £3,600. How do people continue to justify these kinds of profits? I remember talking to you about Centrica, the owners of British Gas, who also had record profits in the middle of this cost of energy crisis. That's the first question for you. And the second one is the prospects of Rishi Sunak looking increasingly dim because his opponent, Liz Truss, had endorsements from Ben Wallace, Tom Tugendhat, and what's his name? Nadeem Zawahi in quick succession, those three. But surprisingly, she's also gotten Penny Mordaunt on her side, given how quite bitter it got between those two teams, Team Penny and Team Liz, while Penny Mordaunt was still in the race. Penny Mordaunt has chosen to support her, which I find interesting in view of a debate that's going on right now in Nigerian politics. How quickly, how easily politicians seem to heal from these wounds and just carry on like nothing happened and put really winning the election above all other considerations. But what do you think are the prospects of Rishi Sunak now?
Well, I mean, I wouldn't count him out of the race. I mean, that's what I'm understanding at the moment. But yes, I mean, you're right. Politicians do seem to swap sides, don't they, with amazing alacrity when it comes to political survival, because you have to ask yourself, what would they be doing in real life? I mean, so, and that if that sounds a bit frivolous, well, hard luck. You know, it's difficult, and they usually only have that sort of position to go back to, which is politics, because under the rules they're not supposed to have significant other businesses. I know a lot of them do, but that's another kind of debate. So I wouldn't rule him out as we speak. The fact that he's also U-turning on a couple of things which we were talking about last week, weren't we? When one happened over the weekend. One's a U-turn on VAT on fuel, which he's apparently now going to try to cut, and he's also talking about cutting income taxes. Now, this is all very well. I suppose the real question is: can you have a tight monetary policy and a slightly looser fiscal policy, which is taxes? I just don't know. I mean, it'll go around to see. The problem with the energy companies is they are extremely volatile. It's the same with Centrica last week, and it's the same with BP. I mean, we discussed, did we not, a couple of years ago when the oil price was actually negative. That's it's an extremely volatile market. I'm not making excuses for the companies, and if I were them, I certainly would be looking at another, giving into another windfall tax. The problem is, though, that if you're a shareholder in these companies, you're in there because you want dividends, and that's what these companies, whether it be share buybacks like Shell did, or dividends like BP presumably will do, and Centrica certainly have. You're in it for the dividends, and so there are all these different kind of pulls, aren't they? It's about shareholders and it's about the market, unfortunately, and it's not quite as simple as to say these are huge profits and therefore they must give some of them away, because they are invested in by people who invest in the markets up or down, rain or shine, basically. I mean, that's just the way of the world, unfortunately. I mean, it's very unpopular to say these kind of things, but it's the truth.
Okay, you referred to the OPEC meeting on Wednesday. 13 key members of OPEC meeting. Well, the expectation is that they will probably take a decision one way or the other to help lower prices. But what options are available to them, and can they really help, particularly Saudi Arabia and the UAE?
I think, do you know what? I'd love to be able to answer your question. I'd prefer to wait, really, to see what the attitude of all these producers is after that meeting on Wednesday, because these are clearly going to set the prices for September, for September onwards, and it's going to be very, very crucial just to find out what they actually decide. I mean, again, what do? You see the oil price consistently above $100 a barrel. I mean, logic suggests that why not supply into that market? However, I do still feel there is a small space, because it's only a commodity, and there is a small space for what economists talk about as being consumer destruction, which is to saying, do you know what? We are not going to pay those prices at the pump. Now, I think that's really where the public opinion will come. Nobody really cares about the wholesale markets and what they do. And I think there's a lot of up and down and a lot of volatility being brought into that. Really, what the likes of you and me and the electorate are concerned about is the price at the pump, and that's not just about OPEC. That's all about refining costs and the retailers themselves. So again, there are many skins of that, many layers of that particular onion which have yet to be unpicked. If I may, I prefer to wait until after Wednesday. We've seen what kind of major decision they actually take, but those are the kind of things that they'll be thinking about. And believe me, however big an oil producer you are, you do need to be concerned about what the ultimate people at the end of it. I think motorists and the fuel pump are the key to this. If you can get that price down, then I think that generally people will be better disposed. But you've got loads of pulls on these companies, as I hope I've explained.
Right, thank you, Mr. Wilson. Our dependable Rosa Sadiri is here to give us an African business update. Good morning, Rosa. Good
morning, Tunu. Good morning, Doctor. We got a special from Oyin Sunday, our correspondent in Abuja, on the exchange rate. So let's take a listen.
For an import-dependent economy, Nigeria's economic woes is no longer news. While citizens grapple with the reality of the country being broke, the depreciation of the naira to 710 naira to the dollar has heightened fears. To understand the situation, however, is to wade through a truckload of factors.
There are factors that I can regard as global factors.
Okay.
There are factors that are structural. There are factors that are policy related. Structural factors is about the high import dependence of the economy. And of course, the number one challenge there has to do with the kind of bill we incur in the importation of petroleum products. If we had our refineries working, the kind of pressure that the importation of petroleum products is putting on our foreign exchange markets will not exist. That is one major issue. Secondly, is the fact that our manufacturing sector is also highly import dependent for raw materials. And this is happening because many of the core industries that are supposed to support the manufacturing sector have been moribund. Then the third and also very important factor is the policy factor. The fact that the CBN has been maintaining a fixed exchange rate for so many years has created a major distortion in the foreign exchange market. It has widened the gap significantly between the parallel market and the official window. And this has brought a whole lot of pressure on the foreign exchange market, especially in the official window. And this has even led to the crowding out of even people you can call the legitimate people that actually need the foreign exchange, because it has created a very big regime of rank tripping. So that is crowding out those who legitimately need the foreign exchange.
Let's not forget the elephant in the room, or in the subsidy. It beats my imagination that a government will use more than 100% of its revenue to subsidize premium motor spirits.
In the past 20 years, the Naira has moved from 139 Naira 60 kobo to the dollar to 710 Naira to the dollar. Many wonder how the government failed to stem the tide.
We prospered from the prevailing global situation between 2004 and 2014, when favorable commodity prices made us rich, made our economy strong, strengthened our exchange rate, strengthened the fiscal situation. But all that ended in the second half of 2014. Since July 2014, the tide had turned. Yes, it was under the Jonathan regime, and they had largely hoped that the downturn would be temporary. But the Buhari regime took over in 2015 with some of us warning that the tide has turned and our strategy should change. But they kept hoping and trying, continued to do things the same way things had been done under the windfall regime. The shortfall has lasted 8 full years now. We're in July 2022. And these shortfalls had been with us since July 2014. So we did nothing wrong. But your second question is, where did we get it wrong? So it's not about what we did, it's about what we omitted.
As the Naira loses its storage value, the demand for valuable currency increases, putting further pressure on the dollar while speculators have a jamboree. The solution is simple: the supply of foreign exchange. The approach, however, is multifaceted. Economists, however, say major blockades must be lifted for the supply of foreign exchange from multiple sources.
There are two sides to the solution. One is correcting the immediate hemorrhage of the currency, and the other one is determining what policy and what exchange rate mechanism is going to be implemented to ensure that you don't get into this crisis on a perpetual basis. So let us first deal with the easy part, which is a corrective action to bring the currency nearer its equilibrium. The most important thing that needs to be done here is to ensure that there's more supply in the foreign exchange market, and that at the same time, we move our interest rate structure, domestic interest rate structure, to be able to insulate the currency from exogenous shocks and capital flight.
The bigger issue as far as foreign investors are concerned is the foreign exchange regime. You have portfolio investors who cannot move their money out. How will new people come in? The foreign exchange policy is discouraging foreign capital inflows into the economy. You can't attract capital when you have almost 7 different rates, when you have a premium of almost 60% between your parallel market and the official window.
While I believe in free markets, we do not have the structural support for a free float market of the currency right now. Because the information is all out there. It's just almost like exposing yourself to a whirlwind. We do not have the mandate we do not have the economic fundamentals for any basis, for any support of the Naira right now. The first thing that the authorities must do to support the currency is to stop spending money they don't have. Subsidy has to go now.
A lot more also needs to be done to avert a recurrence even after supply has been addressed. Nigeria's Eurobond price, which opened trading in 2022 at $105, dropped 28.8% to $74.75.
There are better ways of borrowing, and that's against asset. Nigeria, in the period of the boom, accumulated a lot of assets that are idle all over the country, all over the 774 local government areas. And I can give you examples. I can list some 5 or 6 government agencies that among them own more than 10,000 parcels of land in prime locations across Nigeria. It will include NIPOST. It will include the carcass of NITEL, the carcass of Power Holding Company of Nigeria. It will include all the police, all the barracks. Each of those will have, 2,000, premises across the country, mostly at commercial centers, mostly idle and underutilized. Britain, in the last 1 decade, relocated all inner city prisons and freed their old sites for exploitation, either as luxury offices or luxury apartments or shopping or luxury hotel. They say that they will use the proceeds to reduce the national debt. That's the 5th largest economy in the world.
You cannot have inflation rate at about 19%, and you have your treasury rates at about 4%, whilst in the United States, and Kenya, in Ghana, and South Africa, the policy rate, the difference between the policy rate and the market rates is less than 1%. Yours is a negative about 8%. And that is what is leading to capital flight. And that's what leading people have no confidence, because they can see that there's confusion in the minds of policymakers.
While a policy change to allow a flexible foreign exchange regime presents a short to medium-term solution, getting the public to agree to the end of a fuel subsidy regime is another matter. The call for functioning refineries already sounds like a broken record. Oni Sunday, Arise News.
All right, well, what do you think? What do you think?
Well, quite a collection of very brilliant economists there.
Indeed.
Makrowani, Mudalawa,
Ayo Teriba.
Yep. These are, people who know this subject. But okay, we should, resist the temptation to analyze the problem to the point of paralysis.
Right.
I think what is important is that the economists, we all know, what the problem is. Solutions have been offered, and the focus in that their analysis on what should be done. Okay, take a look at the supply of forex, make Nigeria a more attractive destination for foreign investment by taking a look at policy, address the structural factors that are at work, right? Including worrying about the refineries, if the refineries are working, if we have a good policy with regard to the foreign exchange regime and attack the supply issues, okay, encourage manufacturing. If there is manufacturing, the situation with regard to the Naira would improve. Okay, the bottom line, we need to save the Naira. The question now is, who is going to do it? Who is going to address the big elephant in the room? Starting with the refineries. Crude oil theft, which is also part of the problem that affects, remittances, in terms of revenue within the country. So the question is, who will address it and when? And how urgent? Because it looks like what we're dealing with is the urgency of now. Inflation is 18.6%. Naira is exchanging to the dollar at a very high rate. The analysts are saying that, in fact, if care is not taken, by the end of this year, we could reach 1,000 Naira to the dollar. By which time, the crisis will be unimaginable.
Yeah.
So the question is, who will address all of this? Crude oil theft, the refineries, the manufacturing sector, policy. And this is why I say it looks like, this is evil postponed. The next set of leaders that this country will produce, they have their job cut out for them on the economic front. If we don't get it right and address these issues, we'll be in trouble. One of the contributors talked about subsidy. Subsidy has to go. Will the next government have the courage to remove subsidy on fuel?
That's the question.
So aren't they? Because imagine the chaos, though. It's a thorny one. Yeah.
Your imports, I think about 30 to 40% of import bill goes towards importation of refined fuel products. So you can imagine how much you would save in foreign exchange if you're not importing all that fuel, using FX to bring it into the country. Then you are spending all that money, and then you're now spending it on subsidies. So it's just, it's
a complete mess.
Yeah.
But politics is ultimately a popularity contest, and politicians want to be loved.
Yeah.
So they never want to bite the bullet and give people what they hate, unfortunately. But it's going to have to happen.
It has to. In fact, I checked with some BDCs this morning. It's actually, Naira is actually appreciated a bit. It's still between 690 to about 695 or those. So it's come down from the 700 levels, but is that temporary? Well, what if there's another, it shows that there was a bit of panic buying, that led to where we were, in addition to the supply issues, but it's still high, it's still very high.
You know how the yo-yo behaves.
Exactly.
It goes up and down. So
right,
that's
correct.
why I said that the Naira is clearly yo-yoing, but this economy must become productive.
It has to.
The ascent should also be unproductive.
Indeed, indeed.
Oh, thank you so much, Roger.
Thank you so much.